Hi everyone, in this video I want to talk about the subject of credit as it relates to buying investment property. And a question that's asked often is, do I have to have good credit? Now this subject of credit can be really stressful to people because your credit might not be an 800, might not even be a 700, it might not even be a 600 because of all sorts of circumstances far and wide. And so the question is, do you actually need it? And the answer is, it depends on how you're financing the property. Today we're going to focus on it from the perspective of hard money. Tomorrow we'll focus on private money. But for a hard money lender, it just depends. Ever since the economy has started gearing up, there has been an explosion of hard money lenders. It seems like every day there's a new one out there. And all the stipulations vary from lender to lender. You would think they're all the same, but they are most definitely not. There's all sorts of flavors, and one of those flavors has to do with credit. Some will underwrite you at 600, some require 640, some want 680, some will do 720. Some will do all of them and just charge you different interest rates. Some of them absolutely don't care. The latter part is the best most often for one reason alone. Back in the older days when there was hard money, it was what was called an asset-based loan. The collateral was the asset, which is usually a house if you're dealing with real estate, and they looked at the value of that, and that was it. It didn't matter what your credit was. We saw this often when in the 2009, 10, 11 years when the economy was in the toilet. And at that point, there was also a lot less hard money lenders because, let's face it, there wasn't a lot of properties to lend on that fit their criteria. As a result, what happened was, as the economy came up, more people came on board, but this subject of credit became more and more important to lenders, and a lot of the reason behind it is because there was more institutional funding behind them. Institutional basically means Wall Street money. And so right now there's a ton of Wall Street money. You've probably heard of it, sites like Open Door and Zillow, buying houses, iBuyers, that sort of thing. But this has actually been going on for a few years now, where institutional funding is backing quote-unquote hard money lenders. And to those guys, credit is absolutely a factor because it's a more traditional way of doing business, just like a regular loan. So these hybrids, this hybrid hard money, for lack of a better term, has started considering this. However, if your credit is in the toilet, know that you simply have to shop more. Instead of talking to 1, 2, or 3 lenders, you might have to call 10 or 20 to find one that will work with your scenario. But the reality is there is a hard money lender out there for you regardless of what your credit score is. And yes, there are still hard money lenders out there that will not even look at your credit. They don't care. They do it the older way, which is just based on the collateral. Personally, those tend to be my favorite because they're the simplest to do business with. And most often, they're going to give you the rawest analysis of the deal because they're also lending to you based on the fact that this asset is going to be worth today and in the future what you think it is, because there are no other dependencies. So it's a great setup. Fortunately, we're in a world where there's lots of options for everybody. Don't let credit be the reason you don't do a deal. There's a solution out there for you. Go out there and find it. Thanks.